I'll call the City Council special meeting to order. Clerk, please call the roll.
Councilperson Felder. Present. Whitman.
Here.
Present.
Vining.
Used.
Germaine.
Here.
Lamore.
Present.
Mayor Clark.
Present. We have council action for the special meeting. Councilman Elijah?
Closed session to discuss attorney-client privilege correspondence and to discuss litigation involving Tracy Mix Harms and other consolidated cases and Leslie Pompey.
Second.
There's a motion by Councilman Elijah, supported by Councilman Lamore to go into closed executive session for the reasons stated in the motion. Clerk, please call the roll.
Felder. Yes. Whitman.
Yes.
Angeli.
Yes.
Germaine.
Yes.
Lamore.
Yes.
Mayor Clark.
Yes.
So any super hard questions, go straight to you.
Don't miss this.
Yeah, right.
Need a motion to go back into our special meeting in session.
To go back in our special meeting?
Motion by Councilman Moore, supported by Councilman Felder, to go back into our special meeting session, open session. Clerk?
Councilperson Felder,
Yes.
Whitman,
Yes.
Michaelangeli,
Yes.
Greeny,
Yes.
Lamore,
Yes.
Mayor Clark.
Yes. And so, Mr. Bastu, we have a presentation this evening for our special meeting.
This on here, we're ready for our annual financial audit presentation with Plant Moran. Kristen, if you would, Bill is not here tonight. He's at another client,
Right.
but you're in good hands tonight with everyone here, so thanks.
Right, well, it's good. Well, thank you for inviting us here this evening. It's a pleasure to be able to present to you this evening the results of the 2021 audit. I'm a partner with Moran. I do governmental audits as well, so I'm just getting in for my colleague and friend Bill, who had a double commitment tonight, and I live in Flat Rock, so I just it's a good straw to be able to have the short commute here this evening. So overall, we've got really good results to present to you this evening. Before I turn it over to Rumsey to go through the graph presentation that primarily highlights on the general fund, just make a few comments. This year you had two audits that we performed. First, you had the annual financial report for your CAFR that you've had in the past, but you also had to have a single audit, and that is a federal grant compliance audit, and that's because you spent in excess of $750,000 in federal grant funds this year, so that was an additional compliance audit that we had to perform. The focus areas on that engagement were the CPG grant as well as the coronavirus relief funds. The good news is that you did not have any audit findings. Compliance audits are very meticulous, and you have a lot of rules that you have to follow very dictated by the federal government. So, clean audit there, unmodified opinion. In addition to an unmodified opinion, that's a clean audit opinion on your financial statement audit as well. We have identified no auditor proposed audit adjustments, and there were no past adjustments. We also did not identify any internal control findings. So everything was in good order. Ed and his team were very cooperative, had everything ready for us to be able to do our audit procedures. We were able to perform most of our procedures on site this year rather than doing a remote audit. So that went well as well. So with that, I'm going to turn it over to Rumsey here in just a moment to take you through these graphs. Then when he's done, I will go back over the end of audit report letter that you have. One thing to notice as you go through the graphs, when I mentioned that you have a clean audit opinion, you do have an emphasis of matter paragraph that's special, that's added this year, and that's because there was a new accounting standard that was adopted this year with some of the different fiduciary funds that had to be analyzed to determine if they still qualified to be standalone funds. Your cemetery trust fund needed to be moved into the general fund. So there wasn't a big difference that, but if you see that in your letter for something different, really that's what that pertains to. So with that, I'll turn it over to Rumsey to go over some of the details.
Thank you.
Thank you, Kristen. So as we have in prior years, we have prepared a few slides that will highlight some of the activity in the general fund, and then on the last slide, we have some information that pertains to the city as a whole. This first slide presents general fund revenue on a budgetary basis for the last 3 years. In the current year, general fund revenue was up to $21.8 million, which is up about $1.4 million from last year, or about 7%. The increase came in several different categories. The biggest category, however, was in the area of federal grant funding, federal and state grant funding. The city received $850,000 of coronavirus relief dollars that had to be used for public safety wages and fringe benefits. And the city also received $550,000 in the DNR trust fund grant, which, as we see on the expense slide, also had a matching expense. Property taxes, which is the really big orange bar on the bottom, continues to be the city's primary revenue source, comprising approximately 66% of the general fund revenue. And in the current year, the city received $1.3 million in LCSA reimbursements. That's the Local Community Stabilization Authority dollars, and that's also included in the state sources number. Now, I bring that up because it's important to note that that $1.3 million is not guaranteed, and it's not necessarily something that you can budget and estimate every year. It's somewhat contingent upon what's happening with the state budget, but in the current year, that was approximately $1.3 million. This slide takes a look at the taxable value trends in the city going back from 2008 all the way through 2021 and projecting out a few years. Now, normally, as you are well aware, the market increases in property values does not necessarily translate to increases in taxable value due to the limitations of Headley and Proposal A. But what we are actually projecting is a decrease through 2025 for the city, and that has to do with the DTE settlement that's going to phase in reductions to taxable value over the next few years. Flipping over to the expenses side of the equation, total expenses increased by about $2 million or 10% in the general fund. As we noted on the revenue side, that a significant portion of this is in the area of public safety, salaries and wages, fringes related to expenses that were covered by the COVID-19 grants. Additionally, the community development category is up about $500,000, again, due to the DNR Trust Fund grant. The transfers out was also significantly higher this year, so there was a total of $2.4 million of transfers, and these are primarily for the funding of future capital projects. Now, if we take those expenses and put them in a pie chart by category, you would see that the general fund expenditures were 42% towards public safety, 16% towards general government. Now, the debt service, as you are aware, the city pays for OPEB through the form of debt on the OPEB bonds. So the debt service actually includes payment for those OPEB bonds. So what we do on the next slide is we took that debt service payment related to the OPEB bonds and put it into the categories of which it actually relates to. So the updated percentages after adjusting for that would be 47% for public safety, 17% for general government, and then transfers would be 11%, the next biggest, and public works at 10%.
Can you do me a favor, go back to the previous slide?
Yes.
Okay, so public safety went from 42 to 47.
Yes.
And that includes the debt service.
Correct. Correct. This slide presents a 5-year trend of revenues and expenses for the general fund, and this excludes the DNR Trust Fund grant because that activity, based on the timing, can fluctuate from year to year. Essentially, this graph demonstrates that the city's general fund has been living within its means. The revenues, which are the blue line, are slightly above the red line for most years. So there is not an indication that the city has dipped into a deficit in any given year, and the city is committed to working on a balanced budget there. This slide presents the general fund fund balance by category for the last 2 years. You will notice that non-spendable is up, and that relates primarily to the fact that when there is inventory held in the general fund, it's presented as non-spendable fund balance. The city holds a significant balance of real estate inventory, and that in the current year is up to $1,096,000. So there's a certain portion of fund balance that's designated in that non-spendable category for that fund balance. The committed fund balance also increased from $2 million to $2.5 million, and that extra $533,000 is an increase for the cemetery trust that has been rolled into the general fund. Kristen mentioned that with the adoption of GASB Statement Number 84, it changes the rules and what is considered a fiduciary fund or trust fund. And because of that change, the cemetery fund is rolled into the general fund now. However, it is still being tracked separately, but as a whole, it's reported as part of the general fund. On this slide, we take another look at fund balance. The really big green bar at first is the annual expenditures in the general fund. The blue bar represents total fund balance, but the gold bar is actually what we should probably pay the most attention to, and that's the unassigned fund balance. That's the portion of fund balance that's available for everyday spending, and it is the city attempts to keep this at a minimum of 15% of the subsequent year's expenditures. So the 2022 budget is $19.5 million, and the unassigned fund balance at the end of the year came in at essentially 19% of that amount. So you're above the minimum.
Could you go back to the previous slide, Ramsey? There to the second set of bar there, with the assigned future tax reductions. Keep that number in mind. We're going to talk about that later on in the regular session tonight when we take some action related to the pension transfer that we're looking at. So,
Okay.
thank you.
Just to kind of pull it all together, the first item on here, as Kristen mentioned, we did have a federal awards audit, and happy to report that we did not have any instances of material noncompliance to report or any question costs. To kind of recap and close the point on the fund balance, there is an adequate amount of fund balance that exceeds the minimum 15% that the city likes to achieve. But however, with caution, with the DTE settlement, it's important to be cautious and keep an eye on that number. During the current year, the city paid the full ADC for the pension, that's formerly known as the ARC, or the annual required contribution. The plan is now 102% funded. And you'll see that the OPEB plan is 170% funded. Now, there's two things going on with the OPEB plan. The investments had a really strong year. For purposes of the accounting valuation, this is a snapshot of the investments at June 30. So it's kind of like whatever the market is at June 30, that's going to go directly into your OPEB calculation. Going with that, so that was a very favorable change for the city. Going with that, the city switched over to the Medicare Advantage plan, which reduced the OPEB liability. So that's a favorable trend for the city as well. So when you put the two of those together, it puts the city at 170% funded. Important thing to remember, though, with the OPEB bonds still out there, that liability still is being paid, but it's still out there in the form of long-term debt and not the OPEB liability. And then the city refunded several bond issuances in 2021, took advantage of lower interest rates, which resulted in a net present value savings of $887,000 for future debt service. The city had effective budgeting, and the water and sewer rates were in line with the cost of operating the system while accounting for future reserves. And then lastly, the city had an aggressive capital funding program. So essentially meaning the city took advantage of any grants that were available in the process of capitalizing and improving the city's infrastructure, and added $10.4 million to governmental activities assets and $5.5 million to the business type activities, which is primarily the water and sewer system. So that kind of concludes the points that we just wanted to go over. We'd be happy to cover any questions on the slides either now, or we can after Kristen covers the last letter.
Why don't we cover the letter, and then we'll come back, see if there's questions on any of the slides. Thank you.
Good. So our last deliverable is this end of audit letter. Most of the information contained in this letter is standard, but there are some important things. So let's make sure that we're just covering those as part of your duties with those charged with governance. As we mentioned, you adopted the new accounting standard this year, GASB 84, and that just moved that cemetery fund into the general fund. We noted no transactions throughout our engagement that were in a period that was in an improper period. We didn't note any transactions that were unsupported. In addition, you should know that the financial statements, of course, include some significant estimates as it relates to those pension and OPEB liabilities. Just remember that those are calculated based on actuarial assumptions that would be things that based on mortality rates, assumed interest rates, assumed increases in healthcare costs over the years. Those are funded with the OPEB bonds, but those are the underlying disclosures that go along with that. And then the other items really are standard. We had, happy to report, we had no difficulties during the audit. We did not have any audit adjustments and no past audit adjustments, and had no significant findings or issues as related to the work that we performed. And again, I'd say that's remarkable, really, considering that you had a single audit this year and you don't have one of those every year. As I mentioned, those are just tedious work with high number of transactions, and there's not much room for error for those. So if there's anything that we notice, we really have to report that to you. So sometimes things that might seem a little minor, if a due date was missed on a report by by a week, maybe that might not seem that big of a deal, but those types of things would be would need to be reported. So I just mentioned that so you know that those are high attention to detail, and to not have one of those for a couple of years and then also come out with having 2 programs that you had to have tested and not have any findings related to that is good news. So, all right, we're happy to answer any questions.
We'll see if council has any questions. I'm going to just start by saying it's just unfortunate Mr. Sell isn't here to share in this appreciation of not only the audit, but the hard work that was done. And I know his involvement, he works very close with during that time frame. So we're always very proud of the work he does for us. Let's see if there's any questions. Thoughts?
I went through it over the weekend. I thought the fund balances look good, and I thought what I'm particularly happy with is both the pension and the OPEB are over 100% funded as of June 30. I mean, that goes up and down based on market, but I know that many communities are not in that position.
Absolutely not.
I agree. I kind of looking through this as well, and I know that when you look at that number and you see that we're 102% on the pension plan, but then the OPEB is, significantly over the 100%. But I think you explained well why you have to be cautious and still see that. John, your comments as well. It's a time frame of last June, and things have changed since then. But that's the work that was done. I want to thank the administration, Mr. Pastu, and others looking through that when we had that opportunity when it came to council. We're going to bond for this, and then of course the use of other funds and the amount that was there for the $100 and some thousand as well. Just making those steps at the right time really combined to get to where we are, and we are fortunate in Mr. Sell's leadership again, but why we're where we are in really leading in the state in this area, which allows us to look at other things and do them as well. So it's a very good audit, and I appreciate the information, but also the details. And as a council, as you go through this again, if you wish to, of course, Mr. Pastu and Mr. Sell are always available. But I think there's it's a good message not only for the council but for the community to know where we are in relation to getting things and being very attentive to our finances, and also how we're reporting and getting these kind of reports are appreciated. Thank you.
If
Thank
I
you very
may,
much.
Your Honor, just again, emphasize Mr. Sell does a wonderful job, his staff as well, in preparing for the audit. And again, with the single audit, that we don't have those very often, but clearly Mr. Sell does a good job. But also Caitlin Pierce with our Community Development Department. They just recently had a very favorable audit from HUD of the programs, and not just the financial end of it, but just the timeliness of submitting reports and notices and those type of things that go along with it. So I think you should be pleased with the staff that you have for staying on top of the details. So
Thanks, Vince. It was refinancing. That's the word that wasn't coming to my mind there about to make a significant difference and great benefit. So if there's no other questions, thanks for being here.
thank you.
Flat Rock's not too far. That's good. Give our best to Bill and all.
Have a nice holiday.
Yeah. Mr. Pastu, we have some 20 minutes.
Anything on the upcoming agenda?
Well, I think we'll see if there's any items that the council has. I know that we one of the items that toward the end of the meeting it was regarding the resolution, and appreciate the information provided here. I don't know if there's any comments or questions for council now. I don't have that number in front of me.
So as we go through it, if I
33
may,
things.
just with under presentations, Scott Smiley is under the weather tonight and won't be able to attend. And then also, we've got the public hearing regarding the ordinance 2114. We'd like to still proceed with the public hearing, but we're going to ask that item 3374 be withdrawn, talking with the attorney, the benefit attorney with Jim Green's associate, that Dyke Magassett, that they would like to pull that for approval. There may be a couple of minor changes with that.
So you're pulling that off the agenda?
The ordinance, the second reading of the ordinance. We'll still do the public hearing, and we may have to reschedule another public hearing after we talk a little bit.
For clarity, and I know that Clerk and you and I had a conversation looking this through, that, so 3362, the recognition, and I know we'll get that scheduled
Yep.
when available, and then 3374, but the public hearing will go forward on that,
Yeah.
which is 3389, but not the council action. So my question is, Vince, because I know that this is tying to a lot of things here as we get toward the end of the year, items and steps we're taking. And we have, well, we transition in January, but we have a meeting at that first meeting that this council, while there's not always business done, it doesn't mean there cannot, there still can be. Is that something that you think you'll have back by then?
It's not going to hold up any of the actions tonight.
Okay.
You know, it's mostly with related to the defined contribution plan that we've implemented, and just going through the details that not eligible for rehiring or as well as being available for the opt-out. So.
It's rather than the item later on the agenda, which is about
Yeah,
the
yeah.
pension contribution retirement. Okay. Let's see if there's any other questions. So those two items are the ones we're looking to have
Right.
removed. And I know that during our, there's some discussion at our closed session, items that may be added to the agenda.
Yep, a couple, I believe.
Yeah, okay. I don't know if Mr. Buds, if you want to make sure we know what those are, just a quick review. They're obviously the opioid settlement and then some other, another litigation matter.
Yep.
Other items?
Nope.
About 15 minutes, if there's any
Good.
comments or questions from council. Councilman Felder.
In the consent agenda, item number 3391, the exemption and the changes in Monroe's poverty exemption policy, we're largely just matching the state tax commission on what they're doing, and there was a removal at one point of the requirement to. Two questions there. The removal of the requirement for the signature on the homestead property agreement
Yes.
as a necessary step to purchasing property or closing on it.
No, actually, this if I may.
Yes, please.
You know, in a broader response is every 5 years the State Tax Commission conducts an audit of each assessing unit's operations, referred to as audit of minimum assessing requirements. This was conducted back in November for the city assessor's office. They went through and looked in detail at a number of aspects of the operation, looked at the poverty exemption, and two things they said should be removed. One is this requirement for an applicant to sign the homestead property credit form as part of their application. That's a requirement they no longer have. And then the other part is the poverty exemption application, or on the second one is the sentence, removal of the second sentence that was adopted with the City of Monroe asset test. They didn't feel that was appropriate, so.
There was another removal in there that removed a eligibility provision citing that you don't have that you can't own other property or can't own a certain amount of stocks or bonds to be able to be eligible for the provision set forth. And that along with the homestead property, as in you own another property when purchasing this house and still maintaining eligibility, seemed to coincide. And I was just wondering the purpose of the commission's doing that.
Yeah, let me take a look back at that section that was, shoot.
At this point, do we get a vote, or are we required to match what they set forth?
Well, we typically, if we're being audited, we'll follow their guidelines and recommendations. Um, Just looking at, and to be honest with you, I'm not going to tell you why that aspect of it was removed. It's been in there for quite some time. Is it, yeah, you could theoretically have a property owner that has someone else that's living there permanently that's got a pretty good income and a number of other assets that would be capable of, meeting the property tax obligation. But for whatever reason, they recommended that that be removed from our policy.
I mean, they both seem to be leaning towards allowing eligibility while maintaining properties other than the property in question.
Yeah, I'm looking at the paragraph 3 that was not stricken to see what, if that covers a portion of that in there. I'll be honest with you, that part I don't know exactly why they insisted on that being removed.
Because if it's going to be a definition of poverty and they're only looking at income, well, there's a lot of other things to consider rather than just income.
Oh, absolutely.
Considering
yeah,
someone's
yeah.
financial.
Oh, we still are going to be doing the asset test.
Okay.
Yeah, that's not going away.
What
Then
was
the
the
follow-
change that we were making to the asset test then? Because there was, I'm trying to find it. I'm scrolling frantically.
Well, the following, it says the claimant or any other resident of the principal residence has assets and savings, checking accounts, stocks, bonds, undeposited cash, et cetera, which exceeds 60% of the federal poverty guidelines for the income and based on A above. So there is that threshold that it looks at it differently than, it essentially tells you what do you have in there. That has to
Those
be.
no longer become disqualifying anymore. So you
No,
can
no,
be,
no.
you can be a millionaire and through, as long as all your assets are in the stock market and you're just living off capital gains, as long as you don't have a job, you're fine.
No, that's not how I read that.
Okay.
If you look at the paragraph that remains, is that if what you have exceeds 60% of the poverty guidelines, so take the poverty guidelines, multiply 1.6, and if you've got that much out there, then you're going to be ineligible for the poverty exemption.
Okay. All right, I follow. It's just I'm trying to follow the reasoning behind what they're doing, and I can't quite get there.
Covered down below as I look at it in further detail and start thinking the rationale for it.
Okay, thank you, sir.
Items on the agenda? None?
I wanted to, the city manager and I had a
okay.
discussion earlier, and I just wanted to talk more about possibly having a public forum with DTE. Let's get that in the works.
If I may, Your Honor,
Please.
Mr. Councilmember Lamore, part of it is, there's a couple of ways where you handle these things. One is, I know there's been dissatisfaction with the reliability of service, and you could bring representatives in and, express your displeasure, but does it change anything? And in some ways, I think a more effective means is to possibly hold a public forum. If there's people to circulate petitions, council take a subsequent resolution and send it to the Public Service Commission. At least you're on record with the governing entity that has some regulatory control over it. And then there will probably be a record of the comments because that's really the only way I think you can start gaining any kind of attention to to the reliability of the service that I know many residents are frustrated with, and so.
I'm all for it.
So we could talk a little bit more about that for going forward, how we would handle that, whether it's like a work session or whether it's handled on a separate meeting. I suspect you could probably fill a room with, if you were to put the notice out there, you might need a little bigger room.
I don't think we could be able to hold that.
No, it would be,
I do understand your point, Vince, of, what information that's gathered or items that council has, and it goes to the Civil Service Commission. I mean, not civil service, but the
Public Service Commission.
Service Commission, because that's where it's going to get the attention and how they set things and what they have conversation with DT.
Yeah, we had another interruption today downtown.
Yeah. Came into my neighborhood too for a while.
Yeah, but it's enough to wreck appliances and
Yeah.
whatnot.
There was an article, I tried sending it to council, but it wouldn't let me send the share out. I think it was on National Public Radio, on Michigan Radio. There was an article about Consumers Energy and DTE are this is happening statewide. And they categorized how many tens of thousand outages have happened in the last year all over the state.
We're not alone.
Big deal. It's a big issue.
And maybe that's the collective of other maybe messages to the Public Service Commission as well, not just maybe here in Monroe. Andrew?
Two brief questions regarding Councilman Ike-Angeli's resolution. Third paragraph, second line, should be life, not like. Second of all, I just want to ensure that, be it resolved, the city will appropriate funds. I want to make sure that's TBD, that's not just a blank check. We're going to have a discussion later on what's appropriate for that to be, right?
What was your first comment?
Third paragraph, second
Customer's
line.
life, not like. It's just a typo.
Oh,
Yep.
Other comments? Well, it's 7:20, we have about 10 minutes, so I'm going to get back in our seats. So at this time, I'll close the special meeting and we'll be back shortly.